Hi, everyone. Thank you for joining us tonight for, did I start the recording? Yes, I did. Okay, good. Hi, everybody. Thanks for joining us tonight for the online chapters open forum meeting. We host these meetings the third Wednesday of every odd month. And we always have an interesting speaker, and tonight is no exception. As always, before I introduce Lewis O'Connor, who's joining us from Ireland. Hello. Yes, he stayed up way late or got up way early to meet with us today. I just want to remind you that we are going to talk about real things, real stocks, real assets that you can invest in. But that doesn't mean you should run out and buy them. You always want to do your own research, which is why we're here, right? We love to research stocks, and today is no exception. Take all of Lewis's comments and take them home and study them and make your own decisions, right? And also, as is our normal format, Lewis will make his presentation, and then you'll be able to ask him questions. And then we'll open the floor to any investment related question that you might have, something that's been troubling you, something that you want to learn more about, or just any old thing that pops into your head. So without any further ado, I guess I'll just go right ahead and introduce Lewis. Our guest tonight, let me get to the right page. Oh, crap, I can't find it. It's so unprofessional. Sorry, I am going to, something weird's been happening to my computer, which is that the bottom, you go down to the bottom of the page and the thing pops up so you can read it. The bar, and the bar is not popping up. So Lewis O'Connor is joining us today. Lewis is the founder of Strategic Metals Invest, which is a unique investment platform that helps individuals diversify with rare earth metals, which is a tangible asset class that's becoming essential in tech, green energy, and sustainable development. Lewis has been guiding clients on alternative investment strategies for years, offering insights into the potential of rare metals as a hedge against inflation and as a means to support the green economy. Lewis, take it away.
Thank you very much, Christine. Welcome everybody. Thank you for being here. I'm happy to be here this evening and chat with you. I'll get straight to it. As Christine said, yeah, I'm actually in Tipperary in Ireland, and I'll just say very quickly who. When I say we, I'll be talking about we, and there's three facets to our business, and what I'll be talking tonight is the private investment side. Is we have an offer, we invite private investors to participate in the supply chain, but there's three facets, and the other two are, one is our core business actually, which is probably the most important thing we do. 80% of our business activities is we're buying metals, technology metals, rare earths, directly from producers, and then we sell them to manufacturers. In fact, we've over 4,000 clients in 74 different countries. Our main office is in Frankfurt in Germany. We've 45 to 50 people there. And then the third part of our business is we have a logistics and distribution platform also in Frankfurt where we are selling these metals. We are a tier one supplier to some companies like BMW, Siemens, Samsung, and some of those guys are strategically stockpiling with us as well. So basically, our business model, it's a forward-thinking model based on purchasing industry metals with professional storage. Now, I'll just go straight to, so what are strategic metals? Now, for the purpose of this evening's presentation, we're going to talk about a subdivision of strategic metals, but strategic metals, it's not an academic term, it's not a scientific term, but strictly speaking, when the US Geological Survey or manufacturers talk about strategic metals, they're talking about the metals that are critical to all nations' economic prosperity, also defense or military capabilities. Just as an example, I'll use North America as an example because I know you guys are in the US. Just in the last 2 weeks, the US Geological Survey published a list of critical minerals to the US economy and defense capabilities. And that list is published every year, and there's one or two maybe taken off, and then there's one or two added on. So these are the ones that are most critical. Now, we do sell all of those metals to manufacturers. However, not all 45 of those metals are strategic to a private investor. So the ones we'll be talking about today are about 8 or 10 metals that are strategic to a private investor. And to make it very, very straightforward, it's a very simple equation where you have increasing demand, limited supply, you have potential for profit. So I'll be mostly talking about supply and demand and where the potential for profit lies. So the first thing that I would tell you is the metals we'll be talking about, gallium, germanium, indium, praseodymium, neodymium, they are more like specialty chemicals than metals. And the reason for that is you can see there they differ from base metals. And the most sort of important reason in terms of supply is that gallium, for example, there isn't a significant mine for gallium. Gallium, just like germanium and indium, is a byproduct of another raw material. So the reason why there's a sort of a limit in supply is there's recovery constraints based on the fact that these metals are not uniquely mined. Like I'll give you another example. Hafnium is a byproduct of zirconium mining. For every 50 tons of zirconium, you only get 1 ton of hafnium. So that's the first reason why they're limited, is they're usually a byproduct and sometimes a byproduct of a byproduct. Now, where are the application areas? It's probably easier to say, you know, they're in all, they're modern technology metals. There's not an application or an industry they're not in. Like right now, some of the big drivers coming would be AI, which runs on data, obviously, but relies on rare earths, technology metals for the magnets and the sensors and the cooling systems. So an easier sort of way to look at it is they're considered the backbone of manufacturing in the 21st century. Modern technology, aviation, nuclear, space technology, medical devices. You know, we touch them, see them, feel them every day. One smartphone has 12 or 13 of these technology metals or rare earths. Some of the benefits of owning them is they're purely supply and demand driven. There's no exchange for these raw materials. There's a limited availability due to being a byproduct of a byproduct. Also, in many cases, there's a localized or a heavy localized concentration of supply. China usually comes up. We'll come more to that in a minute. They're considered inflation and crisis resistant. Up till now, they've been largely ignored by institutional money. And the reason for that is they have a relatively small economic visibility in comparison to gold and silver. There's a market cap of maybe 17 trillion in gold. These raw materials, the market cap is 15 to 20 billion. So relatively small, that they're off the radar of institutional money. Now, here's a very quick example of what's coming between now and sort of 2030 and 2035 and beyond. So we've just isolated one industry, one country, and one of the metals for now to give you an idea. So gallium has multiple applications, over 3,000 different applications, but it's a critical raw material for energy transition. So for wind, solar, and electric vehicles. And the country we've picked out an example is Austria. One, you know, small country in Europe, 9 million people. If Austria is to meet its planned energy transition between now and 2030, it will need 4.5 times the current global production of gallium. So we don't just see, well, in fact, we're already experiencing not just shortages, but there's periods when there's just no raw materials available. In fact, it was just I think in the Financial Times this week, and maybe the Wall Street Journal mentioned another one, germanium, that there's no germanium available. China is there's export restrictions. So we experience these scarcity-driven sort of price increases, which I'll come back to more in a minute. But that's just one example. There will be shortage. I mean, gallium is currently being restricted by China. Gallium's gone up about 50 to 60% a year every year for the last 5 years. So again, you could rarely mention rare earths or technology metals without mentioning China in the same sentence. I don't know. This year alone, President Trump has mentioned rare earths, I think, more times than anybody's mentioned them in the last 10 years. The US and Europe have realized we need to wean our dependence off China. That will take time. But where we stand at the moment is China, you can see there is producing about 80%, but more importantly, if you look down on the right, most of the at this stage, more than 90% of the processing is done in China. There aren't processing facilities in Europe and the US, and there hasn't been for the last 20 or 30 years. So what's in it for you? What's in it for the private investor? So this is, January to this decade so far, if you will. As you can see, these metals are outperforming most of the major stock indexes, and they're outperforming precious metals. Actually, those charts, believe it or not, are the real story is better than there, because just give you two examples. Let me pick two. You can see terbium oxide there is up 110% in 4 years. The truth is, terbium was up 500% in a 3-year period when we went into lockdown. What happened? Terbium is needed in semiconductors. So when we went into lockdown and COVID, there was a massive surge in demand for home computers, anything to do with working from home. The whole world went to work from home. And because terbium is a byproduct of another raw material, demand increased, but supply could not. So we had a 500% increase. Similar thing happened then with, you can see hafnium there, 182%. That was actually up 250%. In an 18-month period right after we came out of lockdown, because hafnium is a super alloy in jet engines, rods for nuclear reactors, and as space technology or the space industry comes a fully fledged space industry. So what happened is Boeing and Airbus started to put in all these orders right after lockdown. So those are very good numbers, but they're actually in some cases better now. They've sort of adjusted themselves since. It's exactly the same paradigm as owning gold and silver. Our private investors physically own the asset. So who are you buying from? As I mentioned, there's 3 facets to the industry. This is what I'm talking about tonight, is the private investor side. But this is our trading partner, if you will, which is tradium.com, or Tradium GmbH, which is, as I said, based in Frankfurt in Germany, 45 to 50 people in the office. And then we also have two logistics and distribution platforms. So Tradium are in business since 1999. Over 80% of our business activities on a daily basis are buying and selling metals. And, that's probably the most important thing you'll hear tonight, because if we weren't embedded in the industry, if we weren't a tier 1 supplier to companies like Samsung or BMW or Siemens, it wouldn't make any sense, because the only end buyer for these raw materials are industry buyers. And we have more than 4,000 clients in 74 different countries. Actually, there's over 300 metric tons now in the vault. It's the largest inventory anywhere outside of China. We had the Economist magazine there in July, and they wrote an article about the vault. We've recently been featured in the Financial Times, the Economist, and I was interviewed on CNBC, mostly about the industry side, not about the private investor side. But people want to know what's happening with China and what's happening with export restrictions and stuff like that. So you're buying from a globally recognized industry supplier. Now, I'll run through some of these metals quickly. These are the technology metals. As I said, these are the ones So the best way to describe them, I mentioned earlier, there's about 45 metals just published by the US Geological Survey that are listed as critical to the US economy and military capabilities. We sell all of those 45 to industry, but we only offer about 9 metals to private investors. Now, what are the characteristics that determine, if you will, why these metals go on that list? And I'll just explain what they are as we go through them. So there's 4 characteristics. One, which ones are in the most demand at the moment and for the foreseeable future? I mentioned AI. AI will run on data, but relies on technology, metals, and rare earths. Um, Energy transition, modern technology, automation, robotics. Those are the big drivers coming. So we look at which metals will be the most in demand. Then we look which ones are the least in production. In some cases, like rhenium, there's only 60 tons of rhenium produced a year. Rhenium's a byproduct of a byproduct. So from copper mining, you get molybdenum, and from molybdenum processing, we get rhenium. So gallium, where will the demand come? We've sort of highlighted there in bold print where the demand is. So electric cars, wind turbines, photovoltaics, those are the big drivers for gallium. Germanium. Germanium actually is also a defense metal, as you can see there, for infrared lenses. Germanium at the moment it was featured in the Financial Times just this week because in retaliation for tariffs, China has restricted the export of germanium, and I think it's gone up 122% since April. So these are the scarcity-driven price increases that occur quite often, well, in every sort of 3 to 5 year cycle. Fiber optic cables, but something also there, night vision devices, we'd normally associate that with the military application. However, that same technology now is in all these new safety features in cars, for and self-driving cars as well. Hafnium, as I said, hafnium is a byproduct of zirconium mining. For every 50 tons of zirconium, there's only 1 ton of hafnium. So maybe 70 to 90 tons a year, which you could probably fit in the back of a big truck. Nods for it's an unsubstitutable raw material for super alloys in airplane and also rods for nuclear reactors. Indium, you touch it every day, probably hundreds of times. You can swipe your phone because of indium, but it also has many other, medical technology, LEDs, nanotechnology. What always fascinates me about indium, though, was, and I, until I'd heard about um, some of the specific applications. I mean, we touch and see, people are always looking for the next, where can I, where's the next big thing, or what's the next emerging technology? And people are probably thinking that swiping their phone, and little do they know they're touching a raw material that they can physically own and profit for owning while they're searching for that next big thing. Rhenium, we just wrote an article on it the other day. Again, if you look at airplane technology and aerospace, China's buying as much rhenium as it can because it's going to increase its aviation fleet. At the same time, Boeing and Airbus have published that in the next 20 years, they want 40,000 new aircraft built. So rhenium is going to be demand will increase for rhenium guaranteed over the next 20 years. Tellurium, actually, funny enough, tellurium was just taken off the list, the US Geological Survey, as a critical raw material. And what's interesting here, this is an opportunity for me to give you an example of why it's important to deal with an industry supplier. So we haven't offered tellurium to private investors since 2022. And the reason is there's a mine in Utah which produces copper, which decided to recover tellurium since 2022. So we knew there wouldn't be a shortage. So we haven't offered it to private investors. And our strategy, if you will, has proven to be true just in the last month when the US Geological Survey took tellurium off the critical list. So the point I'm trying to make is we won't offer a metal to somebody if it's not relevant as a physical asset. We've got people in the office in Frankfurt with 25, 30 years experience. They've got their hand on the pulse of, like we have somebody who will specialize in gallium, somebody in germanium, somebody in hafnium. So they would have a good idea exactly how much is in production, what the demand is, how it's likely to be for the next 3 to 5 years. So we've a very we've got our fingers on the pulse in terms of whether they're relevant as physical assets or not. So now these last four I'm going to present are the oxidized or the powdered form. They're rare earth elements. I'm sure you've been hearing about them in the news. President Trump spoke about them in Ukraine, and obviously make no mistake, Greenland, the interest there is not the ice or the snow, it's what's been beneath the surface, and it's rare earths. Plenty of rare earths as well in Mountain Pass in California. The US Department of Defense just became the biggest shareholder in the only mine producing rare earths in the US. And they've put together, they're the largest shareholder, and there's also an offtake and a price floor negotiated into the deal. So the reason for that is China's responsible for more than 90% of the global production of these raw materials. At the moment, two of these, dysprosium and terbium, are under export restriction to the US. So both dysprosium and terbium have gone up considerably this year as a result of that. So once again, supply can be limited, subject to disruption, and that can be a geopolitical escalation. It can be a new technology on the market. So there's different reasons of why the demand can increase, but the supply cannot increase accordingly because of the recovery constraints and the fact that China is keeping as much as it needs for its own domestic uses. So dysprosium, permanent magnets in electric cars and wind turbines. Neodymium is like got a superpower. It can hold 1,300 times its own weight independently. Praseodymium, again, aircraft engines, electric motors, smartphones, wind turbines. Terbium, high temperature fuel cells and semiconductors. Somebody recently here in Europe said we're sort of in a Cold War 2.0 with China already. And this time it's not an arms race, it's a semiconductor race. So that's where, the wars will be won in precision and technology and stuff like that. So again, some of the key benefits, just to recap, our private investors they physically own the asset. It's purely driven on value, is purely supply and demand driven. There's no exchange. The demand, I don't think anybody would argue demand is strong and continually increasing. And you're purchasing from a trusted, globally recognized trader of these raw materials, who also have a practice of repurchasing them from our private investors. We only buy metals from two sources: one from a supplier in China or wherever it might be, and the only other entity we buy from are private investors who we marketed the raw materials to. So it's a closed loop. We offer industry metals, we provide professional storage, and we also have a practice of buying back or liquidating. The facility in Frankfurt, one of the facilities, we've two in the Frankfurt area. It's a bonded duty-free warehouse, so everything is tax-free in Europe anyway. There's no VAT or duty when you buy or sell. Couple of just safety features as well. I mean, if you're considering buying these raw materials, a couple of things to look out for. One, if you buy from us, even if you're storing with us in our facility in Frankfurt, the gallium or the germanium, it remains in its original packaging from the producer. And it's very important because no manufacturer, whether that's Apple or Siemens or BMW or Ford Motor Company, they won't buy these raw materials even from us if they're not in the original packaging. And the reason for that is for the chain of custody. They could end up in the engine of an F-35 fighter jet or a nuclear submarine. So, the chain of custody is very, very important. And that's how you know you're dealing with a authentic, sort of recognized trader, is that the packaging, the original packaging, your materials are still there. Also, it's only because we've got 25 years in the industry, we know, for example, what the purity level Apple would need or Siemens would need. Just like gold, gallium can have 10 different purity levels. So we know what the industry is demanding. Again, very, very important if you're buying a raw material that it can be liquidated to an industry supplier. One other thing I might add just before I finish, I didn't cover, which is these raw materials, as I mentioned, have a relatively small economic visibility. They're only used in quite small amounts. So they're produced in small volumes. And like manufacturers call them the spice metals, which is a very good sort of metaphor for them, just like you'd add a bit of spice in food. So what I'm getting at there is that, for example, indium, you can swipe your phone because of indium. Indium's probably only represent maybe 0.01% of the overall makeup of a smartphone. Another example might be hafnium. It's a super alloy in jet engines. It still represents a small amount. However, they're not substitutable. So let's suppose when the price does increase, if it goes up 50% or 100%, Apple or any of the manufacturers, they just absorb the cost because it's far more catastrophic for the production of the iPhone to shut down than it is for them to pay a 50% increase in cost for a raw material that only represents a small amount of the overall makeup. So I think I've gone through it fairly quickly. I think I had about 30 minutes, and I think I'm just about done. Christine, I'll turn it back to you, or we can open it up for Q&A.
Excellent. Thanks so much, Lewis. I know some folks popped in late, and this is probably a tough presentation to pop in late into because there's so much information, and this is such a topic that most of us don't know anything about. But I'm actually going to turn this over in a minute once I make Phil a co-host to
Sure.
see if he can run the actual Q&A portion of the meeting. Phil, welcome. He's one of my partners in crime here in the online chapter. Sorry, I'm multitasking and doing a terrible job of it. And Phil can all right. I'm not going to multitask. I'm going to find Phil's name and then I'm going to make him a co-host, and then we are going to get on with the questions. Okay, great.
Sure.
You can see I failed miserably at that.
So if anybody had posted any questions, I may have missed them because I wasn't a host, but if you did post a question, can you either repost it quickly or just ask it now?
And it's fine for folks just to come off mute and ask the questions, any questions that you have. And it's okay too if you want Lewis to repeat something that he said. And if you missed our whole beginning, you also can ask questions about any investment related topic that might be on your mind at the moment.
You hadn't asked a question. This is the time. If you're thinking about something, feel free to ask it at this point.
Christian, I saw you come off mute. Did you have a question you wanted to throw us? And also feel free to put yourself to put your camera on so we can see you.
I guess my question was basically what would be a minimum investment on these strategic metals?
Sure. Minimum investment is $10,000, and one can buy, just one metal or, diversification of, as I said, at any given time, we offer maybe 8 to 10 to private investors, and you can buy, an even spread. Or we obviously recommend maybe diversification is a good idea when you buy, say, the full 8 or 10. Then you're invested in the sort of upstream raw materials that become have thousands of applications downstream. You're buying what Tesla need or Apple needs or Ford Motor Company needs. So yeah, you can buy one metal or choose up to 8 or 10 different metals.
What about storage costs? So let's say you invested 10,000 and we diversified. On average, what would it cost either a monthly or yearly basis for the storage?
Sure. So it's 1% a year. That includes insurance, and in Europe we store them in Europe. There's it's called a REACH certification, which is a sort of an acronym for like gallium, for example. Gallium would melt in your hand. It'll be needed in sort of robotics and stuff for medical. So some of them, as you can imagine, require certain conditions for storage. So, it'll always be about 1%, but not anymore. And that would include everything.
One thing that I know that we brought up when I interviewed Lewis for the podcast was that you can go visit your metal if you want to, right? Your metal is sitting there in its warehouse, and you can go visit it and check up on it if you happen to be in the neighborhood, which is kind of fun. It's not as easy to
Yeah,
visit
yeah,
your other stocks.
well, yeah. I mean, it is a physical asset. It just if people are always welcome, before, during, or after the purchase, to come and visit us and see the office and the vault. And I think I mentioned to you, Christine, as well. We recently had some um, ex-military guys, U.S. Navy guys, who are sort of supplying the Defense Logistics Agency over, and we're going to partner with them, and they'll be sort of like a commercial partner of ours in North America. They're going to launch at the New Orleans Investment Conference in November, and then you'll probably be hearing more about us through them. They're domiciled in the US, they're ex-military, and they're also defense contractors. So I think you'll be hearing more about the product from about November on, because until quite recently, we really didn't operate. Well, not that we didn't. It wasn't exclusive, but most of our clients, private investors, were in the German-speaking region of Europe, Germany, Austria, Switzerland, simply because that's where the vault is, that's where the office is. However, we have about 2,000 clients in the US. However, they found us, I don't know, because we never done any marketing directly to the US. But yeah, we're definitely sort of becoming more international as well in the next few years.
I got another question. Like international issues, like since we're in the US, let's say you invest 10,000 in regards to reporting, or usually here you get like a 1099 at the end of the year or something like that, tax reporting, or how does that?
Okay, so obviously you don't want to take tax advice from an Irishman in Tipperary at 1 a.m. in the morning, right? But what I can tell you, 80% of my clients are in the US, and obviously you'd have to check with your tax accountant or tax advisor. But what I can tell you from our standpoint anyway is the vault in Frankfurt, it's a bonded duty-free warehouse. So when you buy and sell on our platform, you don't pay us or Europe or Germany any taxes. My understanding from one of my US clients is that US citizens don't have to report commodities that are held overseas, like timber or metals. However, obviously they do have to report when they sell, the gains and stuff for capital gains. So no taxes due in Europe. However, wherever your domicile is your responsibility.
Right, but I guess the reporting. So let's just say put 10,000, you hold it for let's say a couple years, and it goes to 20,000, and then you decide to sell. Would you get something that says, hey, you purchased for 10 and this isn't sold for 20, and so that way it's easy to calculate the capital gains?
Yeah, 100%. Yeah, you would have when the purchase transact is completed, you have your invoices, your purchase documents, your certificate of ownership, and you have what we call a safekeeping receipt, which is from the storage facility to show these goods have been allocated to you there. And then when you sell, you would receive a sales contract and an invoice as well, which will show you the amount that were sold. Great thing about them as well is they're extremely liquid. If somebody, we don't need 30 days notice, or if somebody comes, I actually a client earlier this week from the US who decided to sell some on Monday. We made the offer, what the prices were Monday, which he agreed to, and he had the sales contract Tuesday, which he signed, sent back to us, and now he'll receive his funds in 7 to 10 days from the date of the sales contract. So a sale can be completed in 2 or 3 working days, and about 2 weeks in total by the time funds are received.
Now, because we are better investing and we love to research things, so when we're researching the prices in the market and trying to track the history, are we just researching that exact metal, or is there another something that we should be looking at specifically?
Yeah, good question, Christine. The first step is like we know like 100% of the time if somebody's buying from us for the first time, that's the first time they're buying gallium or germanium. So we encourage people to go into sort of stay in the information gathering stage for a while. I mean, we have a due diligence portal on the website. We give people a password to that and help them get a good education, first of all. And then once they've got that, and maybe by then they're saying, well, they might, certain people might like certain industries. Like somebody said, well, I want to buy, what are the metals that are needed for AI or for automation, and we guide them towards that. And then we can give them, there's price reporting agencies in North America and in Europe and the Far East, and we give them the names of them, and then they can go on independently if they want to monitor and measure and keep an eye on the prices themselves. But yeah, you'd nearly be doing it for each individual metal, but they're usually all like a price reporting agency will have them all, like Fast Markets or Argus Media or Asian Metals. They'll have all the metals there, so you'll be able to do your comparisons into one place.
I heard you mentioning some of the specific and I think probably more specialized metals. Do you kind of include from what I understand, one of the most common and probably most traded metals would be the gold, and they trade that in GLD or that kind of thing, which is more easily traded, I think. Do you kind of lump gold in with the what you're referring to, or is that just completely different?
We do sell our specialty was until about 2015 technology metals, or rare earths, another name for them. But since about 2015, we also work with gold and silver and platinum group metals as well. So we offer them all. We're very, very competitive in pricing on all that stuff. Precious metals, the platinum group metals, for example, we probably offer a better price than most, simply because it's not really a profit center for us. It's just an additional service we offer to private investors. Our specialty is more technology, rare earths, but yeah, we can offer gold and silver and very, very competitive on the price there.
Nice.
I got another question. Is there an opportunity to purchase it directly and just store it yourself? Like, let's say you're here in America and you just want to purchase, you said the minimum's 10,000, you purchase it and then get it delivered and then you just store it yourself. And is it possible to store it yourself, or is there issues with storing it yourself?
It is possible, Christian. However, we don't recommend it. And in fact, I had a client. I'm sure we've had a few clients in the US. One client particularly said to me, "Look, I like to keep my metals close to home." And I think what he meant was out in the backyard or buried somewhere or something. And we had a very frank, sincere conversation about it. And I said, "Look, to be honest with you, we would prefer you didn't buy them if you want us to ship them, because what happens is our price is to the duty-free facility in Frankfurt. So the private investor would have to pay any additional shipping, any additional taxes. But this is the thing that makes us most uncomfortable is gallium has over 3,000 applications, and more than 1,000 of them are military applications. At the moment, the US and China is in a technology war over computer chips and defense metals and stuff. What would make us uncomfortable is if you paid us for the metals and then they get to customs in Houston or Maryland and you get a call from the local customs guy saying, "Hey, why are you importing gallium? What are you going to use it for?" And et cetera, et cetera. And then they might say, "Well, we're not going to let you import it because you can't give." And then you'll call us and say, "Hey, why did you sell me this stuff?" So to be honest, if somebody wants to store it themselves, we would say we'd rather you didn't buy that. You'd go, maybe, you could try and source it in North America. But to be honest, we've done our research. You can only buy these the only other places you can buy in the US would be more as a hobbyist. You can buy on eBay and Amazon. So if you're planning to make a profit, don't do that. If you want to just admire them and keep them at home, do. But we're the only industry supplier that invites private investors to do this. And the reason it works is it's because we're an industry supplier and we have for example, if your metals are sitting in our vault in Frankfurt, you have access to more than 4,000 clients. You have access to our logistics and distribution platform. If you take delivery in the US, they're out of the chain of custody. It's cost you more money to get them, and they're out of the chain of custody. So we'd probably say you're better off buying gold locally than trying to do that.
And again, with the storage temperatures as well as the insurance, you'd have to consider both of those as well.
Yeah, exactly. Yeah, with a metal like gallium, which will melt in your hand, it just wouldn't make sense at all. Some of them now, because we sell, on the industry side, we sell in metal form and oxide and nitrate and liquid. So some of them, like the real metal one, that you could store them almost indefinitely. But it's just not a good idea. If you want to profit from owning industry metals, buy them from a recognized supplier and keep them in the chain of custody.
So, Lewis, I remember when we talked again on the podcast that you were telling me about a situation where I think it was indium, where there was a need for it, and you reached out to the people who owned it and said, "Hey, we want to offer you a premium because there's just a shortage and we need it." Can you talk a little bit about that? I think people are interested in that.
Good point, Christine. I'm glad you brought that up. So we have a practice of repurchasing the metals because we can mediate a sale to an industry buyer. However, and this is actually happening right at the moment with dysprosium, terbium, and germanium. None of these raw materials have left China since April the 4th, I believe. It's a countermeasure to the tariffs, that were put on by the US administration. So there's a shortage of them. And normally, if a client wants to sell, we suggest hold these metals. Don't buy them unless you're going to hold for 3 to 5 years. Anybody who's held for a minimum of 3 years has made money. None of our private investors lost money if they hold for a minimum of 3 years. Now, if you come to us to sell, we will always offer you the market value minus 10%. Because we're, that's where we make our some money from the deal. So any given day, we'll offer you market value minus 10%, except when there's a shortage. And right now, there's a shortage of dysprosium. So it's gone up 122% since April. So we're offering, all of our private investors have received emails in May and June and July. And we offer to buy those, anything they have back. We say, look, it's a good time to sell. There's a shortage. We need the raw material. Now, they don't have to sell. But at the moment, we're offering, I think, there's no spread. There's no minus 10%. And we were offering a premium of 20%. Now it's up to 40%. So, quite a few of our clients have made a nice profit on dysprosium and terbium this year. And these are the scarcity-driven price increases that happen often enough that people make money out of them. Now, the good news is they're usually going up in value anyway. So over 3 to 5 years, you will make money, but you can really benefit from political escalation or China just restricting more because they, for their own domestic purposes, or a new technology comes on the market. So they really are dynamic in that respect.
And you said before that you could buy multiple metals. Would we be making our own decision as to what to do, or do you have sort of the equivalent of like an ETF or a fund where you've got, it's got 10% of these 10 different metals or whatever?
Yeah, well, we'll usually make suggestions, at any given time, for example, if one particular metal has gone up a lot and we think maybe the price is not going to continue to go up, we might say, oh, we wouldn't buy that one right now. But we usually guide people, we tell them specifically which ones, what applications they have in specific industries, where we see the growth coming. But yeah, we'll usually make some recommendations at the beginning, and we'll tell people why we're making those recommendations or suggestions. Two of the rare earths at the moment, neodymium, praseodymium, until about a month or two ago, the price was really low. It was sort of at cost, maybe even below cost, and they've just started to move. So we're sort of recommending them because the prices are still low at the moment. With some other metals, the prices are high at the moment, and we're saying no, we wouldn't recommend them at this. But in a year from now, that could change. We might reverse what we're recommending and what we're not. Just depends on demand and price.
What are those two used for, the ones you just mentioned?
Well, they've multiple applications, but primarily in sort of all modern technology. They're also in magnets. Everything's about magnets nowadays. Electric cars, wind turbines, solar, and AI. So they're going to go on a bit of a run. And China had been sort of manipulating the price, and now they've just sort of, the gloves are off. Really, the things have really escalated in the last few months. But not just, basically what's at the heart of it, Christine, is this all really, suppose you go back to about 2018, and the US and South Korea and Holland, I believe, they were sort of restricting the most advanced computer chips getting to China. And China realized that, like Nvidia even was only not selling them the most advanced ones, So China came up with this idea then, well, look, you have the technology, but we have the raw materials. So they've been restricted. There's been tit for tat, back and forth. But the most recent thing, 18 months ago, China said, okay, what they've done is they've installed sort of like a tap system. And they have, if you were, say, a producer of dysprosium, you could export to whoever you wanted. But since the last 18 months, you have to now apply for an export license. So the Chinese government can see who the consignee is and say yes or no. In April, they upped the ante and said, okay, not only do we want to see who's buying it, we want to know what they're using it for and what technologies they're using. So it was their way to maybe try and get the information they needed. But China can not only sort of competes in this industry, they shape it and they bend it because they've an unrivaled dominance, which is not likely to change anytime soon.
Anything else? Any other questions? Sounds like we're good. Good presentation. It sounded very interesting and definitely not mainstream. So it gives some people something to think about with alternatives.
Great. Well, look, thanks very much, Christine, for the invitation, and we'll stay in touch. You probably see us maybe more in the US now. As I said, we've got a partner over there starting in New Orleans in November, and then there's a group we're probably going to possibly work with. We're going to meet them in November. Have you heard of the real estate guys?
Yeah.
Yeah. So they're going to come over to the vault as well, hopefully by the end of the year. And so look, thank you very much. I'm going to sign off and I'll stay in touch, Christine. And thanks everybody. Thanks, Phil, for your help and Christian for the questions.
Thank you.
And hopefully we'll see you again.
Thanks,
Very
Louis.
much. Appreciate it.
Get some
Thanks
rest.
indeed. Okay, bye-bye.
Bye.
Bye.